The one dark spot for us is China and the impact of the shadow banking system, which is really just a culmination of the symptoms of the artificially low interest rates in the deposit system. So I don't know if you know, but there's something like 17 trillion renminbi sitting in bank deposits, earning less than 0.3% on a regulated basis in an inflationary environment of 3% plus. And so depositors are actually being charged to leave their money in real terms with the bank. And it's no wonder that this capital is searching for a better home, a more productive home. And in fact finding its way into the Australian property market and global property markets and creating quite a bit of asset inflation. So I guess to some extent, my mother always taught me you should always write a thank you letter or say thank you when you've had a party and the party's over. But at some stage we're going to have to send a very big thank you note to the Chinese Reserve Bank or Reserve Bank equivalent for keeping global interest rates as low as they are, because they're really responsible for it. And that's enabled all of us to make money and buy houses, etc. So that worries us a lot, because the Australian economy is to a large extent dependent on what happens with capital flows out of China, now in the property market. And secondly, dependent upon the continued offtake of our natural resources to drive our economy and our tax revenues. So if that comes to a grinding halt, and I'm not saying it's going to, but if that comes to a grinding halt, there will be some severe implications. We focus on preserving capital, and as a result, preserving capital in that kind of environment would be very difficult. Those are the things that keep me awake at night.
Okay.
Absolutely, I don't think we're going to have to wait long for inflation. My definition of inflation, as I learned at school, was inflation is a result of more money chasing the same amount of goods. I already mentioned the huge influx of Chinese capital into our economy. Low interest rates domestically means there's more money floating around, and the credit cycle is only just starting again. So asset inflation has happened to a large extent. What happens next is cost inflation or cost of living inflation, and I think that's going to be a big problem.